Hello everyone, welcome back to my channel, and if you are new to this channel, don't forget to subscribe this channel. In this video we'll have a discussion about multiple choice question of IND AS 40, that is investment property. In the last video we have already discussed the MCQ for business combination IND AS 103 and income tax, that is IND AS 12. Let us start a discussion for IND AS 40 investment property. Before I start the discussion, don't forget to like this video and share this video with your friend. Can we start the discussion? Yes, sir. Now, come to question number 1 of IND AS 40. Already, this PDF has been given in the Telegram channel. You can download a PDF from the Telegram channel if you have not yet downloaded. Chalega? Yes, sir. So, come to question number 1. Twinkle Limited is an entity engaged in the trading of textiles. It purchased a building with the objective of earning rental and capital appreciation. So it means they purchased one investment property. Since its parent Koji Limited required a building for its sales office, means for what? For their own business. Twinkle Limited rented the building to Koji Limited on market terms. Twinkle Limited classified the lease as an operating lease. Select the appropriate response from the below mentioned option. So for Twinkle Limited, it become an investment property, but for parent company, it become a property, plant and equipment. Chalega? Yes, sir. So let us see option number A. The building should be recognized as PP in the standalone balance sheet of Twinkle Limited. This is not correct because that will be investment property in the standalone balance sheet of Twinkle Limited. The building should be recognized as an investment property in the standalone balance sheet of Twinkle Limited. Correct. As well as in CBS of Koji Limited. This is not correct because the property is within group and that is used for production purpose or for business purpose. That will be owner occupied property, means it will be what? A property, plant and equipment in the consolidated financial statement of parent company. Chalega? Yes, sir. So option number B is also not correct. Option number C, the building should be recognized as PP. This is also not correct. So option number D will be only correct. The building should be recognized as an investment property in the standalone balance sheet of Twinkle Limited. Koji Limited should recognize the building in consolidated balance sheet as property, plant and equipment. Option number D is correct. Chalega? Yes, sir. Come to question number 2. The junior accountant at the Lease Land Limited is muddled up with accounting for various property. Your help is required to identify which of the following are not examples of investment property. Of course, we'll help correct now. So we need to find out which are not investment property. A. Property intended for sale in the ordinary course of business. This is inventory. So this is what? Not an investment property. Land held for long-term capital appreciation. Can I say this will be an investment property? A building that is vacant but it is held to be leased out under one or more operating lease. This is also investment property. Owner occupied property is not an investment property. Land held for currently undetermined future use. This will be also classified as investment property because the use is not determined. It will be deemed to be held for capital appreciation. A building owned by the entity and leased out under one or more operating lease. So building owned and given on operating lease, this will be a investment property. Property that is leased to another entity under finance lease. So property which is leased to another entity under finance lease. So can you say this will not be an investment property? This will not be a investment property. Correct. So this is also a correct option, which because you need to find out which is not an investment property. Property that is being constructed or developed for future use as an investment property. Of course, that will be an investment property. So option will be A, D and G. A, D, G. So option number B is correct. Chalega? Yes, sir. Come to question number 3. IND AS 40 is applicable to which of the following property held under finance lease and leased out under operating lease? This is only correct because held under finance lease, they have taken the asset on lease and given on operating lease. However, now they in the books of lessee there is no finance lease, there is no operating lease, but we need to understand the emotions of the option. It will be held under lease. Correct now, held under lease as a ROU asset. Held under finance lease and leased out under finance lease, this is not a investment property. Property acquired with a view for development or resale, this is also not an investment property. Property acquired by employee paying rent at less than market, and this will be classified as property, plant and equipment because that has been given to employee. Any property given to employee at consistent rent will be classified as what? Property, plant and equipment. So option number A is correct. Question number 4. Which of the following is not considered as transfer from or to investment property? Let us see the option. So option number A is given commencement of operating lease from undetermined use. So when it was undetermined use, it was investment property not given an operating lease. So it is investment property to investment property only. Therefore, option number 1 is only correct. But lead all other option. Commencement of owner occupation from operating lease means now it is used for owner occupied property from operating lease. So this is what transfer. Commencement of development with a view to sale from operating lease. This is also transferred. Commencement of operating lease and end of owner occupation means initially it was used for owner occupation. Now they started giving operating. So this is also transfer, which is not. So option number 1 is not a transfer to or from investment property. Chalega. Coming to question 5. Which of the following characteristics distinguish investment property from owner occupied property? So we need to find out which of the following characteristics distinguish investment property from owner occupied property. So property held for sale in the ordinary course of business. This is not a distinction between that. Property held to earn rental or capital appreciation. Okay, this is only the correct, because this is the characteristics of investment property. Property classified as held for sale. This is inventory. Property held for use in production or supply of goods or services for admin. This is property, plant, equipment. So they have said which will distinguish investment property from owner occupied property. So that will be what? Option number 2. Option number 2 will be correct. Yes, sir. Question number 6. At what value the reclassification or transfer between investment property and PP are made? So transfer are made at carrying amount. At carrying amount. So transfer are made at carrying amount of profit transfer. Option number 1 is only correct. If you want to read other options. Chalega. So transfer will be done at carrying amount, not at fair value. Okay, sir. Question number 7. AG Limited has purchased a commercial building and let out the same to one of its subsidiaries. So they purchased one commercial building and given rent to its subsidiary. How should it be reflected in the consolidated financial statement? Because can I say it will be within group, used by subsidiary. If nothing has been given, so of course we'll assume that it is used for owner occupied property as an owner occupied property, and therefore in consolidated financial statement it will be classified as property, plant, and equipment. So point number 1, owner occupied from perspective of group. Option number 1 is only correct. Chalega? Yes, sir. So question number 8, similar question. AG Limited has purchased a commercial building and let out the same to one of its subsidiary. How it will be reflected in the separate financial statement of AG Limited? So in separate financial statement of AG Limited, can I say it will be investment property which will be measured at cost? So can I say option number 3 will be correct? Investment property measured at cost. So in the separate financial statement, or you can say it is nothing but standalone financial statement or individual financial statement. So AG Limited, you need to, they have asked from AG Limited point of view. Got this point? Yes, sir. So it will be investment property measured at cost, not investment property measured at fair value. So read the option carefully. Chalega? Yes, sir. Coming to question 9, which of the following is an example of investment property? Land held for construction of a factory, not investment property, that is property, plant, equipment. Building rent out to employee, this is also not investment property. Loan rented to third party for event or private function, this is what investment property. So any loan given for rent for organizing some event will be an investment property, because that is for earning rental income. Parking lot attached to land, this is also not investment property. Option number 3 is correct. Chalega? Yes, sir. Coming to question number 10, state which of the following statement is true. An investment property may be a qualifying asset under Ind AS 23. Correct, it can be a qualifying asset because it may take substantial period of time for getting ready for its intended use or sale. An entity is not required to capitalize the borrowing cost in respect of investment property even if they are qualifying asset. Entity is not required to capitalize so of course that is not correct. Of course, if it is a qualifying asset, borrowing cost will be capitalized. Investment property can be measured fair value, 100% wrong, because fair value option is not given under Ind AS 40. Investment property measured fair value is not depreciated or tested for impairment. This is 100% wrong, because it is of course will be available for tested for impairment but under cost model. Correct. Now option number 4 is also not correct. Option number 1 is only true. Coming to question 11, on 1st April 2001, ABC Limited purchased a new head office building for 60 crore. So they purchased a new head office building for 60 crore, and on the same day leased out top 3-4 to his subsidiary on a long-term operating lease. So top 3-4 floor has been given on rent. The annual rent receivable is 2 crore starting from 31st March 2002. So it was given on 2 crore starting from 31st March 2002. Chalega? Yes, sir. On 1st April 2001, the directors of the company estimated that initial cost of the building should be allocated 15 crore to the top 3-4 and remainder of building 20 million and land component 25 million. So investment property, what is the cost price? Because the top 3-4 will be classified as investment property, that is 15 million. On 31st March 2002, the property had a fair value of 64 million, out of which 25% was attributed to the top 3-4. But can you say fair value option is not available for investment property? It is available for property, plant and equipment. The useful life of the building is 60 years. The carrying value of investment property in the separate or standalone financial statement of ABC Limited as on 31st March 2002. They have asked as on year end, so that will be after depreciation. So you need to first allocate. So they have given how much? 15 million. 15 million is what? The cost price. Understood? In this will charge depreciation. The 15 divided by 60, that will come 0.25. So minus 15, so it will be 14.75. So option number 3 is correct. So 15 minus 0.25 is the depreciation for the first year. Therefore it will be what? The carrying amount will be 14.75. Very simple, super easy. Come to question number 12. AG India Limited uses portion of building for their admin use and let out the remainder portion. So they are using the portion of building for admin purpose and let out the remainder, which is not right approach for dealing with the situation while accounting in the books of company in accordance with India's property. So this is a question of dual use property. Let us see the approach. Account for the portion separately if this portion can be sold separately. This is correct. If the option can be sold separately, then we'll account two portion under separate Ind AS. Chalega. An investment property, if the portion could not be sold separately, an insignificant portion can be held as in admin use. Of course, whenever insignificant portion is owner occupied portion, the entire asset will be classified as investment property. Option number 2 is also correct. As owner occupied property, if the portion could not be sold separately, an insignificant portion is rent out. This is also correct. When insignificant portion is the let out portion, then entire asset will be classified, entire property will be classified as what? Property, plant and equipment. This is also correct. Option number 4, it will be treated as a ROU asset depending upon the significance of self usage and let out. This is 100% bakwas point. So option number 4 is what? Not correct. So which is not the right approach. So option number 4 is not the right approach. Chalega. Come to question 13. Which of the following is an example of investment property? Let us see. Property held for sale in the ordinary course of business, sale or in the process of. So this is an example. This is not an example of investment property. ROU asset related to property used for business purpose. So that is also used for business purpose. That is also not investment property. Property leased out to another entity for finance lease. Once it is given on finance lease, so it will be de-recognized. The question of classification will not arise. ROU asset related to building held by the entity and leased out under one or more operating lease. So option number 4, if you have taken an asset on lease and sublease on operating lease, that will be classified as investment property. The option number 4 is correct. Now come to question 14. Real Estate Limited have acquired an investment property within the meaning of India's property investment property. The company has the detail of cost and other related expenses, but it is not sure as to what would be the correct accounting treatment of the said item. Identify the correct statement. Means they have given some option. We need to identify which one is correct. Point number 1. Startup costs are not capitalized to the cost of investment property except cases where they are necessary to bring the property to condition necessary for it to be capable of operating in the manner intended by management. Correct only, because startup costs will not be capitalized. Yes, it can be capitalized if they are directly attributable to bring the asset in working condition. But this point, the first one is correct. Operating losses incurred before the investment property achieve the planned level of occupancies are also not capitalized. Correct, because initial operating loss will never be capitalized. Point number 3. Abnormal amount of wasted material, labor and other resources incurred in constructing or developing the property are not to be capitalized. This is also correct. Abnormal loss in any case, whether it is PP, investment property, it cannot be capitalized. Means all 3 points are common for Ind AS 16, Ind AS 38 as well as Ind AS 40. So all are correct. Option number 4 is correct. Chalega. Come to question 15. Beauty Limited had acquired a property on lease by paying a premium of 11 lakh for the lease term of 5 years. Paying a premium means it was paid on the date of contract. Means a lump sum was paid on the date of contract only. So an asset was taken on lease by paying some lump sum payment on the date of commencement or on the date of contract only. Fair value of the asset was how much? It was 19,50,000. This information is not relevant. As per terms of annual lease rent is 2 lakh per annum for the next 5 years. The present value of annual lease rent is 7 lakh 60,000. So they have given the present value of all the lease payment. The company having taken this property for further let out will recognize the same as investment property under Ind AS Part T. So the asset was taken on lease and it was held as an ROU asset, and now they will sublease for an operating lease. So can you see this asset will be classified as investment property and Ind AS Part T is applicable. But Ind AS Part T says that whenever anyone is holding ROU asset as a lessee, then for measurement principle we need to go to Ind AS 116. Means this ROU asset will be measured as per the requirement of Ind AS 116, and Ind AS 116 that it will be measured at present value of lease payment, means initial lease liability plus any amount is paid which is paid on or before commencement date. So okay, the present value of lease payment is 7 lakh 60 and amount paid on or before commencement is 11 lakh. So 11 lakh plus 7 lakh 60 is 18 lakh 60,000. So ROU asset means this initial cost of investment property, which is nothing but ROU asset, will be what 18 lakh 60,000. So option number C is correct. Chalega? Yes sir. Coming to question 16, Zebra Limited has an investment property building which is being carried in the books as on 31st March 2022 at 25 lakh. The opening carrying amount is given, means 31st March 2022. This is the balance as on that is given. As on that date is given. During the year ended 31st March 2023, means after 1 year, the company Zebra Limited has stopped letting out the property and started using it as office premises. It means it is reclassified from investment property to owner occupied property. This is very important. Reclassification wala point is very important from exam point of view, as to the extent MCQ is concerned. On 31st March 2023, the management estimate of fair value building is 22 lakh. This information is not relevant. So you can delete this information, because for investment property, fair value is relevant only for disclosure purpose. The cost of the building is 20 lakh, and as per the cost model, the written down value will be 15 lakh. So as on 31st March 2023, the carrying amount is 15 lakh, and we know reclassification is done at carrying amount. Therefore, the answer will be 15 lakh. Zebra Limited should reclassify the investment property into owner occupied property as on 31st March 2023 at 15 lakh. However, from my point of view, there is one mistake in drafting the question. You can see the opening balance means as on 31st March 2022, the WDB carrying amount was 25 lakh, but they have given the cost of building is 20 lakh. The cost of building cannot be less than the carrying amount. Understood now? So it is quite possible there may be some drafting mistake, but can I say we want carrying amount for the solution, and the carrying amount is given 15 lakh. The 15 lakh will be the answer. Okay sir? Yes sir. Coming to question 17, X Limited own a building which is used to earn rental, means it is investment property. The building has a carrying amount of 50 lakh. X Limited recently replaced the interior wall of the building, so any replacement cost will be capitalized, and the cost of new interior wall is 5 lakh. So 5 lakh will be capitalized. The original wall have a carrying amount of 1 lakh. So of course, can I say the carrying amount of the part replaced will be de-recognized. Therefore, what will be the cost? Of course they want that only. How X Limited should account for the above cost? It will 50 lakh plus 5 lakh minus 1 lakh, that is 54 lakh. The 54 lakh will be the answer. Option number C is correct. Chalega? Yes sir. Coming to question 18, Netravati Limited purchased a commercial office space as an investment property in the Global Trade Center commercial complex for rupees 5 crore. So this become the purchase price. However, for purchasing the same, the company had to obtain membership of the Global Trade Center Commercial Complex Association by paying 6,25,000 as a one-time joining fee. Can you see this is required to obtain, means they can purchase the same only by obtaining the membership. Therefore, this become directly attributable cost for the acquisition of that asset. Therefore, it will be capitalized. Fair value of property initially is 5 crore 5 lakh. This is not at all relevant. What will be the value of investment property? The initial value of the investment property will be 5 crore plus 6,25,000. That is option number B. So they have given one option. You can see C is 5 crore 5 lakh, which is fair value, and they have given D either B or C, which you may be confused in exam. So fair value for investment property is not at all relevant. So option is what? 5 crore 6,25,000. Question 19, X Limited purchased land worth rupees 1 crore. It is an option either to pay full amount at the time of purchase or pay for it over 2 years for the total cost of 1 crore 20 lakh. Can you see, even though we are purchasing any property on deferred payment basis, the Cost price will be equal to present value of all future payment, which is nothing but purchase price at normal credit terms. Means even though you are purchasing at deferred payment basis, the cost price will be equal to the purchase price when purchase price at normal credit terms. Correct. Fair value of property initially is 1 crore 5 lakh. Once again, this is not relevant. What should be the value of building under both the payment? To under both the payment, whether you are purchasing, whether you are doing payment on the date of purchase only or whether you are doing payment after some time, the cost price remains same because the purchase price at normal credit term will be equal to 1 crore only. Therefore, the answer will be what? 1 crore. Option number A is correct. Suppose in the question they ask what will be the total interest in the second method, the total interest will be 20 lakh, which will be recognized as an expense over the period of 2 years. Understood? Yes, sir. Question 20. Moon Limited has purchased a building on 1st April 2001 at a cost of 10 million. The building used as a factory by Moon Limited and was measured under cost model. The expected useful life of the building is estimated to be 10 years. It was purchased on 1st April 2001 and the life is what? 10 years. Due to decline in the demand of the product, the company does not need the factory anymore and has rented out the building to a third party from 1st April 2005. Means 4 years has been expired. We need to find out the carrying amount of building on the date of reclassification. So carrying amount of the building 10 million divided by 10. So 4 million will be the depreciation. So carrying amount will be how much? 6 million will be the carrying amount. On the date of fair value of building, once again 8 million is not at all relevant. That is given to confuse you. At what value building will be initially recognized as investment property. Reclassification is done at carrying amount. So reclassification wala point is very important for MCQ based question. So option number B will be correct. Chalega? Yes, sir. Then question 21. In the financial year 2001-2002, X Limited incurred the following expenditure in acquiring property consisting of 6 identical houses, each with separate legal title, including land on which it is built. So they purchased 6 houses with land. The expenditure incurred on various dates are given below. On 1st April 2001, purchase cost of property is 1 crore 80 lakh. This will be capitalized. On 1st April 2001, non-refundable transfer tax 20 lakh not included in the purchase cost. This will be also capitalized. On 2nd April, legal costs related to property acquisition. This will be also capitalized. On 6th April, advertisement campaign to attract tenant. This will not be capitalized. On 8th April, opening ceremony function. So any cost incurred for opening ceremony, means inauguration cost, will never be capitalized. Throughout 2001-2002, incurred 1 lakh toward day-to-day repair maintenance. So repair and maintenance are charged to profit and loss account because it will not meet the recognition criteria. This will be also charged. This will be also not capitalized. X Limited uses one of the 6 houses as office and accommodation of its few staff. Out of 6, 1 will be property, plant, equipment, and other 5 houses are rented to various independent third party. So other 5 will be investment property. Cost of the investment property. First, we need to find out total cost. Total cost will be how much? 1 crore 80 lakh plus 20 lakh plus 5 lakh. This become 2 crore 5 lakh into, can you see, we need to find out proportionate cost of the 5 building. So 5 by 6 into 5 divided by 6. So answer become 1 crore 70 lakh 83,000 something. So option number B will be correct. So we have done proportionate calculation 5 by 6. If they have, suppose they ask for property, plant, equipment, you would have done 1 by 5. All question done. I hope you have understood entire discussion of investment, entire discussion of MCQ for investment property chapter. One thing we have understood in all these particular point for MCQ, the reclassification wala point, reclassification wala concept is very important from examination point of view. Got this point? I hope this will definitely help you to understand this chapter from MCQ's point of view. Once again, I just want to remind you that our objective is to achieve 30 out of 30 in this MCQs. So how many of you are targeting 30 out of 30? You need to comment in the comment box, because when you believe that you can score 30 out of 30, then only you can score 30 out of 30. So when that belief will come, when you mention that point somewhere, so in the comment box do mention that you are targeting 30 out of 30, because once you mention that, you are committed to that. Understood? There should be commitment from your point of view that yes, we are targeting 30 out of 30 in MCQs. All the best for your preparation. I think this will help you. Next time, next video will meet with some other chapter. Just comment in the comment box which chapter you want for MCQs. Just comment in the comment box. Okay sir, I hope this is done. We'll meet soon. Till then, bye bye, take care, enjoy your remaining day. Bye bye.